Good morning, everybody. It's March 2nd, 11 a.m. here in New York. Got finally some warmer weather here that's melting the snow. We didn't have a snowstorm that the weather forecasters predicted for Sunday. On the other hand, it was fairly easy to predict that there was going to be a storm in the Middle East. On Friday, there was lots of evidence that things were coming to a head, and sure enough, the war started on Saturday, and right at the beginning of the attack by Israel and the United States on Iran, looks as though 40 of the leaders of Iran were killed by a bomb in Khamenei's complex, including Khamenei, of course. So the question now is who's running Iran? And apparently there's some rule where a committee of three gets sort of a temporary leadership role. I think one of them is supposed to be a cleric. Another one maybe kind of more a political individual. Anyways, these three people are supposed to make a decision on who the next Ayatollah is. The problem they have is anybody they pick is going to have a target on both his front and his back. And they have to be concerned about having a target as well if they don't start indicating that they want to settle this thing sooner rather than later. But in any event, in my humble opinion, no military expert, Iran has lost this war. They are running around without. They have been decapitated. Even the foreign minister of Iran, I think it was on Sunday, basically looked clueless and said, in effect, that all these drones and missiles that were being splattered all over the Middle East, not just Israel, but also in Syria and United Arab Republic, Bahrain. He basically said that the units that were firing them had been given orders just to proceed if they didn't get any orders. In other words, Khomeini was anticipating that if he got decapitated, that the war would go on. And by one account, they kind of picked three layers of leadership to so if they keep getting decapitated, they'd have to lose three more heads. But in any event, it seems to me that Iran is going to have to beg for a ceasefire, and that it'll be a situation very similar to what we saw in Venezuela. Rather than regime change, the Trump approach to dealing with bad actors, or at least countries that don't share our values and are pursuing policies that aren't consistent with American foreign policy. Well, like it or not, this is the way it operates. And in Venezuela, he decapitated the head again. Didn't kill him, but brought him to the United States. And the U.S. is working with what's left of their regime, and it seems as though the regime is being fairly cooperative because they aren't being taken out. So I guess, or at least picked up and brought to the United States for imprisonment. The same situation in Iran. There's no thinking at all about boots in the ground. Another Gulf War where we bring in soldiers and armament. It's all being done with a combination of intelligence and air and a united front by Israel and the United States. These kind of random targeting of Iran's neighbors have clearly convinced the neighbors that that Iran is not somebody they can work with, and that they have to kind of have a united front. vis-a-vis Iran, and so Iran has no friends. Look, I think a lot of this is really all about China and Russia. The axis of evil has been China, Russia, North Korea. It's included Iran and Venezuela, and maybe little tiny Cuba. And right now, it's pretty clear that the axis of evil no longer has Venezuela, and soon won't have Iran as part of this group. And I think you can throw Cuba in there as well. Basically, the administration's choking off oil supplies to the Cubans, and it won't be long before there will be the U.S. will be calling the shots of what happens in Cuba, I think. Um, but this is really all about China. China's been very aggressive in its foreign policy with the Belt and Road Initiative, building roads and bridges and ports all around the world, making other countries dependent on China and it, clearly borrowing money from China. So that's been a priority of China. And so China's the view of the Belt and Road is it's not just Belt and Road, it's Belt and Road and ports and sea and everywhere around the world and basically surround the United States. So Trump revived the Monroe Doctrine and basically with the Venezuela made it clear that the U.S. is not going to tolerate Chinese expansion in Latin America. There was a issue about who ran the ports on either side uh, of the canal, the Panama Canal, and it looks like that's been resolved in a way that keeps China at bay with regards to having strategic port control of both ends of the Panama Canal. And in Venezuela, the Chinese invested a lot of money in Venezuela, and that's kind of all down the drain. Same story with Iran. That China's gotten a lot of its oil from Venezuela and Iran, and China invested a great deal in Iran. The Iranians bought all of their spying equipment, this social scoring and keeping track of where everybody is. Well, Iran's been buying that same system that the Chinese have been selling to them. And looks like that's all kind of going to come unglued for China. I think China's strategic goal was to kind of tie us up in the Middle East by having Iran continue to foment trouble. So they were very supportive of Iran, and the thought was, there's only so many fronts that we can cover at the same time. So if we're kind of stuck with this Middle East situation, we're not going to be as effective in the Indo-Pacific theater. And so I think the game plan, Trump and his advisors kind of looked around the world, came to the conclusion that China was becoming an increasing strategic threat to the United States. And so I think it's one of the probably the biggest reason why the United States moved against Iran. But of course, there were other reasons, like the fact that Iran has been a sponsor of terror throughout the Middle East and indeed around the world, and has just been at war with us. I mean, it's been nice that we've been nice to Iran all these years, but the reality is the country's been at war with the United States, and so this is sort of a realization that, oh yeah, we're at war, so maybe we should win this one. So that's where we are. I think that this is not this war isn't going to last very long. I think the Iranians have already lost it. Their crummy little navy has been sunk. They don't have any jets. Whatever they had, jet fighters, that seems to have disappeared. The Israelis and the Americans can fly over wherever they like. And so I think the strategic goals of um, toppling the government, getting a regime that maybe isn't all democracy and all warm and fuzzy towards the U.S. Because there's a lot of Iranians that are very supportive of the West, very supportive of the U.S. I don't know if it was artificial intelligence or not, but on LinkedIn there was a video, for what it was worth, that kind of panned people going outside in Tehran and sitting on their porches in Tehran and shouting out BB June, which is BB Dearest. So again, I mean, I believe it, but then again, I have no way to confirm that that's exactly what's been happening. And needless to say, the evening news hasn't covered anything like that, though there has been one footage that I saw over and over and over again of some uh, anti regime demonstrators in Tehran. So this is all about China. Let's see if the meeting between China and Xi is still on. I think that's scheduled for April, or maybe things have changed to such an extent that Xi has to kind of regroup. I don't know who he regroups with because he's basically purged all of his generals, and I don't know whether that makes China more or less dangerous vis-a-vis Taiwan. But China's had the opportunity to see America's military power once in Venezuela, twice in Iran, and maybe there's sort of the widespread notion that there's some sort of timetable for China to invade Taiwan in 2027. Well, maybe that'll be reconsidered. In any event, I think it's going to be a short war. I think there's plenty of oil out there right now. There's a blockade. There's no blockade because the Iranians really don't have any way to blockade it with ships. That doesn't mean they can't launch uh, drones and other missile objects at ships trying to get through the strait. But the real hangup is insurance, and maybe that'll be cleared up shortly. And then again, Israel and the United States are just continuing to pound away. So wherever missiles and drones are being launched from, they're going to be pounded into oblivion here, I think, within a few days. If that's the case, and the price of oil is up, but last night there was talk about it going up over $80 for Brent. I think last I looked here, Brent was, where's my Brent? I got too many. Oh, there it is. Yeah, Brent is up 550. It's actually at Brent is at 78.37, so it's not over $80. And there's talk that, obviously, if it's not a short war, and if ships can't come and go through the Strait of Hormuz, then we're looking at a lot higher than $80 a barrel. But that's not the way I see things playing out. The way I see things playing out is geopolitical risk is likely to be significantly reduced in the Middle East once Iran is completely defanged, and I think they've already lost a lot of teeth, and there aren't going to be too many left to take out. So if that's the case, that's one geopolitical concerns that I've had that I think goes down in terms of riskiness. So where are we? I think we're still looking at a U.S. economy that's doing quite well. I think we're still looking at a very strong current and future outlook for earnings. I don't think we're looking at a recession. I'm still using 60% as the base case for the roaring 2020 scenario. I'm still using 20% for a melt-up scenario. I was thinking of reducing the melt-up scenario maybe down to 10%, given that the market's kind of stalled out and that we've had the leaders, the Magnificent Seven and other AI leaders stalling out. But the market's done a fabulous job of rebalancing without having much of an overall correction in the stock market. As a matter of fact, the S&P equal weighted is at an all-time record high, while the S&P market weight index is just kind of doing loop-to-loops right below 7,000. So that's pretty impressive. And as I'll show you in a minute, the reason that's been going on here is as we've seen the the forward PE ratios of last year's winners come down. So that includes information technology and communication services and a few others. But meanwhile, the PEs of industrials consumer staples have gone up. But financials was the other one where the PE is gone down. So net, the PE for the overall market hasn't really come down much, and earnings keeps going up. No sign at all that that's kind of rolling over. Quite the opposite. Looks as though earnings are getting better and better in terms of the slope. Let me first make sure everything's working smoothly here. Yes, that is a B-17. Okay. All right. Let's rock and roll here. Lock and load, I guess, is more appropriate these days. But let's share. And let me put on my sharing glasses. Uh, and I think we're here. Yeah. Okay. So this is the quick takes, and again, on in the market call on over the weekend, I'd like to update you on some of the key variables that we're following, particularly earnings. But here's what I said before: is the S&P 500 is just kind of doing loop to loops below 7,000. It's still above the 200-day moving average. But meanwhile, the 200-day moving average on Friday actually made a new record high. So that's pretty impressive. That's the Magnificent Seven losing leadership and given some of what they're giving up to the rest of the market, to the impressive 493. Sector-wise, there's been quite a rebalancing so far this year. Energy has been a big winner. I mean, I screwed up. I should have overweighted energy, but I just think there's so much oil and gas out there that the supply, I think, is going to bring the prices down. So I think once the markets perceive that this situation in Iran is getting resolved and that Venezuelan and Iranian oil policy will be made in the White House, maybe in the new ballroom, that the conclusion will be that there's lots of oil. You know, energy demand, oil demand in China, at least Chinese imports of oil have been flat for a few years now. So that's an economy that had been booming, not as booming as much. But anyways, they're all driving electric vehicles, and they don't have any problems over there using coal and oil and whatever else they need to produce electricity. But they certainly don't need as much oil. Um, so if you're in there, it's pretty easy to overweight energy. It's still just about what 3% of the market cap of the S&P 500. The same thing with materials. We have a few weeks ago we said, hey, duh, we recommended gold. Why aren't we recommending materials? And so materials is in our overweight list. And so year to date, this is what these have done. This is the week to date. David came up with this way of looking at the charts. I think it's pretty handy, dandy, and useful. This is consumer staples have done extremely well, and some of that, a lot of that, maybe is Walmart and Costco. It's the retailers. Industrials, we remain overweight on that. Utilities have done well. Real estate, and then healthcare. We in our rebalancing story at the beginning of December, we recommended healthcare as an overweight. Hasn't been a spectacular success yet, but we think it'll be okay. Meanwhile, the previous winners, the communication services, consumer discretionary, technology, financials, all down. Let's look at on financials. The issue there is a few issues. There's the Trump's suggestion of a 10% cap on credit cards. There's the private debt market issue that's hanging over the credit market. Maybe it's one of the reasons the bond market, the Treasury bond market's been doing so well. And then we've got the AI story, which has also disrupted the financials. But we think that the regionals and the big money center banks still look good to us. We think that they'll all be using AI to increase their productivity. I don't think they're going to be replaced by AI technologies. So here's the percent of stocks that are down year to date in the various sectors, and so the ones last year's winners are the ones that have the most losers, and then last year's laggards have been doing pretty well with very few losers. This is our call on December 7th was underweight Magnificent Seven, and relative to the impressive 493, and this is MAGs divided by XMAGs ETFs, and so far that's working out. We were about a month late. Michael Burry, I think, nailed it when he raised a lot of questions about AI capital spending, returns on all that capital, how you depreciate GPU chips and things like that. That created a lot of anxiety. And then Anthropic started, delivering all sorts of add-ons to Claude that unnerved people in the area of software and things like that. I just signed up to Claude for the $20 version last week, and I prompted it to create a table comparing FOMC minutes, the latest and the ones before, and it was phenomenal. I'm almost all of a sudden I'm a coder, but actually what I am is a prompter. I think there's still going to be lots of job for people who know how to prompt AI. Meanwhile, here's one of our favorite charts. It makes us warm and fuzzy here. We got analysts raising their 2027 estimates. There's still an upward trend in 2026. Forward earnings keep going up, all-time record high. Slope seems to us to maybe picking up a little bit here. But this is all good. And the forward earnings tends to be a pretty good weekly indicator of the broad economy. So that kind of confirms our view that the economy is doing well. Joe Abbott, my colleague, came up with this chart a while ago. It's pretty clever and pretty cool. It's I think also an economic indicator of sorts. It shows the percent of S&P 500 companies with positive 12-month percent changes in forward earnings. So that's doing quite well. This is a fun chart. This is back to what I said about the PEs. Here's the S&P 500. This is on February 27th on Friday, and this is the PE at the end of last year. So if you look at the S&P, the PE has come down, but not a lot, from 22.2 to 21.6. And remember, people were saying that the high PEs in information technology, like 26.5 is what it was at the end of last year, means that when the AI bubble bursts, the stock market's going to take a dive because those are high PE stocks. Well, meanwhile, as I mentioned before, some of the laggards have become high PE stocks. They were actually high. Industrials was not a cheapie, and now it's even more expensive. Consumer durables has got a high PE, though it's a little cheaper. Consumer staples, its PE has gone up. So all in all, that explains why the equal weighted market indicator is doing so well. So I guess what's there to worry about? Well, certainly the Middle East is on everybody's radar screen. But as I said, we think it's going to be a short war. So we're actually thinking that, once this is resolved, the situation will improve dramatically in the Middle East in terms of stability. Abraham Accords get more Arab nations participating. Price of oil goes down. And that could all happen in a matter of weeks. On the other hand, at the same time, we're seeing more deterioration in the private credit markets, and maybe the Fed pays attention to this, and they decide that to join Warsh in lowering interest rates, or maybe they wait until something actually breaks. But this is not the same as the banks. If something breaks in the credit markets, it's basically a hit. It's a haircut in somebody's rate of return. It's not the depletion of capital in the banking system. It's not systematic risk. Meanwhile, our late call, we should have said at the beginning of last year, but better late than never. This is year to date, so we haven't totally missed it. This is all country world ex-US is up 11.1%. It's the emerging market economies. I don't know that South Korea and Taiwan are actually emerging, but they're included in that index. By the way, I don't think I have Israel in here, but Israel's market's been a big performer. Meanwhile, the other thing to worry about, I guess, is the labor market. Block came out and said that they're firing half their workforce. I got an email from one of our accounts saying, well, that's interesting, but what they didn't say is that they also do a lot of Bitcoin mining and they have a lot of people employed in that area. And maybe they're just using AI as an excuse to cut back in an area where they're not doing too well. So we'll be looking more closely at that. But everybody's going to be using AI as an excuse to trim their workforces if they need to do it. But we're actually thinking in labor markets improving. It did that in January. A lot of people thought that was a one-off aberration. Let's see what February brings. But anything employment related in the stock market has taken a big dive. Now let's see if I can, in a few minutes, go for the charts in the morning briefing. Venezuela's production has gone up. It's going to continue to go up under the stewardship of the White House. The Israeli stock market 2 years ago basically bottomed and has been anticipating that all this confrontation, all these military engagements at some point are going to settle down, and Israel will be one of the winners from all that. I think we'll soon find out that some of these Arab markets, particularly Saudi Arabia, Aramco's stock price is up, but the Saudi market is down. But that could offer some opportunities for those of you who invest in the Middle East. Uh, this was Iran's production. From what I gather, I don't think we've been bombing any Iranian oil facilities. That's not in our interest whatsoever. We want the new regime, whatever it might be, to first and foremost listen to us, follow our commands as we're doing in Venezuela, follow our guidance on how much oil they should be producing and exporting. So the price of oil has shot up here. It hasn't hit 80. Um, and we'll see when things settle down. I think it's going to come right back down, maybe to 60. Lower oil or gas prices, which is what I'm seeing in the next few weeks, not today or tomorrow, should be a big boost to disposable income. Uh, Meanwhile, it's also a big boost not only to U.S. consumers, but consumers around the world. And so U.S. Global stock markets continue to move higher. The emerging markets, as a lot of them are beneficiaries of lower oil prices. So right now, some of them are down because of the blockade or the blockage or whatever that is, the difficulty of getting oil and gas through the Straits of Hormuz. But once that's clear, let me take somebody out of their misery there. Okay, energy stocks missed that. Wasn't underweighting it, but you can see that when the market decided to rebalance, it was like bam, right into energy, right into consumer staples, right into real estate. So it was pretty dramatic. But this is probably due for a correction here, and it's not going to do it today or tomorrow, but it could in a short war scenario. Um, Meanwhile, the bond yield fell below 4% on Friday. Now it's back. Somebody's very persistent here. Take them out of their misery. Um, so the price, the bond yield's back above 4%. Um, I think we're going to maintain this range where we've been, somewhere between 4% and 5%. We're below 4. We were on Friday. I think that was because of the private credit issue, maybe a safe haven issue as well. Inflation, and look, the bond yield fell to below 4% when the PPI inflation was hot. I think that kind of covers what I wanted to cover. Still using gold for 6,000 by year end, 10,000 by the end of next year. Um, I was looking at gold, and it's not like it's not like it's going straight up. So I think gold and maybe oil are telling us it's not going to be a long war, or maybe they're telling me because that's what I want to believe. That's it. Yeah, we've looked at that PE ratio chart. That's good enough. Okay, sorry for the lengthy monologue, but a lot of things to talk about today. Let's see what we got here. Um, Let me fix this a little bit so I can read it. Okay. Ed, what is it? Oh, yeah, somebody was asking me if that's the B-17 in the background. Yeah, my wife gave it to me love B-17 movies. So somebody put together one made out of wood. It's really cool. Eric, Dr. Ed, assuming the U.S. is successful, would the U.S. interrupt the flow of Iranian oil to China? Venezuela crude is a small percentage of China's crude, but Iran, yeah, I think they would. I think this is first and foremost Cold War II. I mean, Niall Ferguson, the famous historian, called it Cold War II, and that's exactly what it is. The United States has decided that they have to contain China. It's kind of late. I mean, they've already kind of spread around the world, but on a belated basis, the U.S. is trying to knock them out of Latin America, knock them out of the Middle East, and the big losers here clearly are Russia and China. Dr. Ed, adding into the rapidly increasing productivity theme, buying by boomers, how much of a driver will this be to all things leisure? And has the market insufficiently discounted the scenario counter to the Citrini Dyer scenario? Hey, look, I don't think you can. I mean, the Citrini Dyer scenario is a novel. It's interesting. It's well written, but it is fiction. They admit it themselves. But first and foremost, I think one of their clients made a fortune shorting the stocks that they mentioned might be hard hit by AI. So it's not a real credible scenario from my perspective. It's talking a position. But yeah, I think I don't think we're going to have a situation where people lose their jobs because of productivity, and we don't have consumer white collar workers, and then we don't have blue collar workers, and then we don't have an economy, and we have a recession, and woe with us. Sorry, I just can't be a Luddite about this. We're using AI more and more all the time. We decided to go not use ChatGPT. We love Claude. Our tech guy, Steve, is rewriting our website with AI technology. You'll be able to go on there and ask for our opinion about things, and it'll kind of survey the morning briefings back to 2010. Give you anything you want that we've written with some conclusions. Then, of course, you can still always reach out to us humans. But we're also designing AI tools to compare FOMC minutes, press conferences, and so on. And we're finding it to be an amazing tool. And nobody's getting fired here. Quite the opposite. A lot of the grunt work is being displaced by more time to do quality work. And we're doing things that we never would have even considered doing because they would have been too expensive to have some outside programmer do it. John, foreign stocks are down substantially versus U.S. stocks. Is this a buying opportunity? The short answer is yes. John, if the geopolitical situation is safer because of defanging Iran, what does it mean for gold's price now and in the longer term? I don't think gold going up has been all about Iran. I think gold going up at first was all about central banks that don't like us, especially after we froze Russians' assets when they invaded Ukraine. It's all about them buying gold, and then I think maybe other central banks started to say, "Hey, this is pretty cool. This is a reserve asset that's going up in value." So maybe it kind of broadened out to other central banks. And then, people in India have always been big fans of silver and gold. And when they saw that the price was breaking out, maybe they joined in the party. I think the big buyers are actually the Chinese. The Chinese have a very high savings rate. They got killed in their property market, and there's no signs at all that that's going to improve. Government's done nothing to help. And then they got whipsawed in the stock market. It's a very volatile market over there, and they're seeing gold going up. So there's some evidence from Shanghai warrants, gold warrants, that China is a major buyer of gold. And I don't think they were doing that in response to geopolitical uncertainties, but geopolitical uncertainties are still there. And as we see today, gold is up on not the uncertainty, but the reality of what's going on in the Middle East. I take a couple more, and then we'll call it a session. What is your take on China? This is Ian. Poland, Turkey, Brazil, Kazakhstan being the big gold buyers of late. Well, I just mentioned China. I'm not really that familiar with every country that's buying gold, but there's lots of people buying gold all around the world. I mean, gold is the new Bitcoin. It was widely perceived that because Bitcoin can be traded 24 by 7, and it's got this technology that makes it hard to trace, and all the things that were supposed to be great about Bitcoin. Well, good old-fashioned gold seems to be over the past year well outperforming Bitcoin as a store of value. Certainly not a means of transactions, except for maybe central banks. Okay, two last ones. What's driving the strong consumer discretionary numbers? Well, we talked about this before. The baby boomers are retiring. Baby boomers have $85 trillion in net worth. When you retire, you start thinking about having a good time before they put you in a box. And so why not spend it? Well, got to leave something for the kids, but they never listened. They never cleaned up their room. So why not just spend it? So there's a lot of spending going on. And I think the baby boomers are helping their young adult children as well as grandchildren because there is an affordability issue for young people without a doubt. Finally, Denise, do you expect rotation back into growth tech out of the leaders in energy materials value? Not anytime soon. I think this isn't just a trade. I think the AI uncertainty is going to last for a while here. Semiconductors, obviously, and semiconductor equipment makers are clearly the pick and shovels that makers that'll continue to do well. But there's a lot of software companies where, yeah, they're cheap, but there's just a lot of uncertainty about what this is all going to bring. And the big risk now is that Anthropic puts out a new version of some sort of tool that challenges the business model, or at least in investors' minds raises a lot of uncertainty. Well, look, thank you very much. I hope I didn't create any uncertainty. You kind of know where I stand. I try to be forthright about that and tell you where the risks are. And have a good week. And let's all pray for a short war. And it's pretty clear we're going to win it, in my humble opinion. Thank you very much.